Performances make stars, but records make legends. That's true in sports and in financial markets alike. We admire those who became billionaires with their investment performances. But in terms of saving money for others, one man holds a record that may never be beaten. Jack Bogle. It's estimated that he saved $1 trillion to investors. So how did he do that? The story starts in 1951 when he finished his thesis on fund management at Princeton with the following advice. 1. A reduction of sales loads and management fees. And 2. Make no claim for superiority over the market averages. Walter Morgan, the CEO of Wellington, a fund manager, was impressed. He offered him a job. There Bogle did so well that he eventually became CEO himself. It was a traditional fund management company, picking stocks to beat the market. But the belief that things could be done differently was always on his mind. And the research he kept reading made the concept stronger and stronger. People like Samuelson, a future Nobel Prize winner, were challenging the status quo. Books like A Random Walk Down Wall Street showed, and I quote, "Most everyone is wasting their time trying to beat the stock market and called for a cheap index fund." Or The Loser's Game, which was comparing the stock market to a casino where odds were against investors because of their costs. The data confirmed the concept. From 1945 to 1975, the S&P 500 outperformed the average fund by 1.6% per year. In 1975, he decided to launch, convinced he could deliver a better performance than most funds at a fraction of the cost. He built a pitch to show that great rewards grow from small differences in cost. A $1 million investment with a 10% annual return would be worth $17.5 million after 30 years. With an 8.5% return, so 1.5% difference, it would be $11.5 million. So he spoke to the board and convinced them to launch a new company named after HMS Vanguard, Admiral Nelson's ship in many famous battles. The company was at the vanguard of a new logical concept, index funds. And it wasn't going to be stopped easily. The industry was not scared. In fact, they thought it was a bit ridiculous. The chairman of Fidelity, a big asset manager, said this would never work. The concept of average sounded like mediocre. Who wants to be operated by an average surgeon, be advised by an average lawyer? How can you build highly skilled, professional asset managers competing against each other and trying to beat the market by just calmly following the market? They were planning to raise $150 million. They raised 11.4. In the 70s, assets stayed at similar levels. If it was a ship, the Vanguard fund would look like this. Small, hard work, in cold weather. The fund must have been operating at a loss. Luckily, the company had a legacy of traditional funds as well, with assets over $1 billion, and it survived. It just got by until the 80s. It was outperforming year after year though, and the concept was becoming a reality for everyone else. The Vanguard ship was sailing and it was growing. The 90s were a turning point. The internet made it easy for everyone to access the data. Bogle was often invited on TV, and although he wasn't always getting the best question, he was getting his message across very clearly.
The index funds will continue to outperform the stock pickers?
I don't think there's such a thing as a stock pickers market, Tyler. All investors are picking all stocks, and to the extent an index fund owns all stocks, it's a sort of contradiction in terms, because if the good stock pickers take all the good stocks, the other half of the market will be owned by the bad stock pickers who pick the bad stocks. It all comes out to a sum of one.
Everybody noticed. Even Fidelity launched index funds, and a new type of index instrument, the ETF or exchange-traded fund, appeared. The billions were flowing. Vanguard were launching more funds based on the same concept, so it started to look a bit like a whole fleet. Vanguard soared and keeps growing very fast until today. It now has over $5 trillion in assets under management, but the idea has grown even bigger than Vanguard. It has changed the way we invest forever. It's what we call now passive investment, where you simply follow the market as opposed to active investment that tries to beat it. And with $1 trillion of saving, the investor community can really be grateful to Bogle.
Jack Bogle has probably done more for the American investor than any man in the country. Jack, could you stand up?
There'll be more assets in passive investment than active investment by 2024. Mutual fund fees continue to decrease. This month, Fidelity launched the first 0% fee index fund. In fact, index funds are now so popular that it's easy to forget how courageous and tenacious Jack Bogle was in starting them. Thanks for watching. This is actually only half of the story. We're going to go deeper about the life, the values of Bogle, and what makes the company so unique and grow so fast. This is for the next episode though, so if you liked it, subscribe to get the full story.